Did prices go up or down in May of 2024 in the King County real estate market? Stay tuned. We're going to talk all about what's happening with prices amidst the higher interest rate. Don't forget to stick around. I'm going to tell you a little bit about how Fannie Mae has revised their interest rate predictions for the rest of the year into 2025 at the end of this video. Okay, interest rates remain high and an increase in inventory and closed sales transactions show that buyers and sellers are adjusting to this new interest rate. So if you are following along with the King County real estate market or the real estate market in general, you know that the interest rate has not come down by much. According to the Northwest Multiple Listing Service, it's come down about 0.14%, down to around 7.03 for a 30-year fixed rate. Now we have seen some variability in that, same as last month in April, where we saw that going up and down. It continues to do that, which gives buyers a little bit of pause. They do typically seem to adjust to the interest rate after around 2 to 3 weeks of seeing it a little more steady, but it is something that gives buyers pause, understandably, because they're not sure where they can actually lock in that rate to get the home that they want. Keep in mind that for every tenth of a point that the interest rate goes up or down, those buyers are able to afford about $100,000 less or more based on the same exact monthly payment. So if the interest rate is going from 7.15 to 7.05, that $600,000 house that they had budgeted may now only be viable at a $500,000 price point for their same exact monthly payment. Now, if you're flexible in the monthly payment, that could very much change. Let's dive right into the numbers for the Northwest Multiple Listing Service report for what happened in May of 2024. So, prices did go up. There was an overall increase amongst all 26 counties of about 7% on the median price of sold homes. So we are seeing some appreciation. I believe that's from April to May. This happened as an increase in 17 of the 26 counties in the Northwest Multiple Listing Service. As usual, King County was the highest there with the median sales price of $890,000. Now that is a little higher, as we always talk about in Seattle specifically. That's closer to the mid $900,000 range for the median sales price. Now, overall, there was a 6% increase in the number of closed sales transactions as well compared to May of 2023. So year over year, we are seeing more sales take place, just a slight amount more, and we are seeing the median price go up. So more homes sold and at a higher price. Now, the number of homes on the market increased across the multiple listing service. Overall, there was a 41% increase in properties listed covered in the Northwest Multiple Listing Service. So 41% more homes listed this month in May of 2024. Now, also the number of condos for sale went up. So 70% year over year, with 2,071 actively listed condos by the end of May across the Northwest Multiple Listing Service. So condos, as you might remember, made a tank, or they really went down during the pandemic. Not a lot of people wanted to be in condos or share space, and those have now changed. They are going up. We see more condo listings, which is amazing. And we are seeing the median sales price of condos sold in May 2024 up by 11.5%. That was at $529,000 approximately. Now that's across the whole entire multiple listing service. So keep in mind that this includes all counties. It is not just specific to Seattle, but essentially what we're hearing is that the purchasing power of prospective buyers, it's remaining constrained because of the interest rate. So if you think back to during the pandemic, that interest rate was around 2 to 3%, maybe 4%. That gave buyers a lot more power to pay a higher price based on the interest rate. But inventory levels have improved dramatically in compared to May 2023, an increase of 41%. That's a ton of new homes on the market, which is great for the buyers who are shopping right now. And stay tuned, because we're going to talk about how that increase in inventory could impact you if you're a seller before the end of this video. Now, the number of sales closed also was increased. We talked about that before. So amongst all of this activity happening, more sales closed, a higher price, we are seeing that you would assume buyers and sellers in the market are becoming accustomed to this new interest rate environment. New being, really it has been around since the beginning of the year, so it's not that new. It's been here for about 6 months. Now, I promised to go over what does this mean if you are a seller and there's 41% more new listings on the market. This means that you have to be very careful about your competition in the market, and you have to be very acquainted with the prices around you, what's selling and what's not selling, and for what reasons. So it is very important that as a seller, you do your due diligence and make sure that you are pricing your home correctly. We can always talk about pricing strategy if you want to schedule a one-on-one with us. And you need to make sure that your home is ready to go to market. That is mass appeal to as many buyers as possible, that you make those upgrades that make a big impact on buyers' purchasing decisions, and that you present your property to the market in a really great and fantastic way, because 41% more listings means a lot more competition for you as a seller. Also, what that is showing right now in the market, we are seeing that sellers are being a bit more aggressive on their pricing. At the beginning of the year, what we saw is that homes that were priced really well were getting multiple offers and going over the list price. Now this, I'm specifically talking about single family homes, which is the most desirable kind of vertical of homes that are being sold. Those were all getting a ton of offers going $100,000 to $200,000 over the list price, specifically in Seattle neighborhoods. Now, what we are seeing is that some of those homes have slowed down. We're not seeing as many offers. We're seeing a lot of the buyers who probably started searching at the beginning of the year now have found the home that they want to be in. It's a little less competitive out there. And because those sales that closed back January, February, March, April have now closed out those higher prices, those are the comps that sellers are currently using to price their home, which means that if they listed in January, they would have been down here. Now the comps are showing them that they're up here. And so they may be acting a little bit too aggressively in their pricing of their homes because buyers are taking a little bit of a pause and they're not going after those homes in such a competitive way as they were before. So if you're a seller, make sure to pay attention to your local market dynamics and exactly what's happening in your neighborhood. Now let's get into some of the stats for King County specifically. So in King County over the last 5 years, this is the number of active listings. So we are coming up, we are trailing in May just 2019 compared to the past 5 years. We're slightly above where we were in 2018, but like we mentioned, 41% above where we were in 2023. And you can really see that in this new chart that the MLS has added. In the green, you see that in May, there were 3,922 active listings as compared to 2,702 May of 2023. So we're seeing a huge jump year over year, but we're also seeing a jump from April. So a lot more inventory coming onto the market, it seems, or else being listed and sitting, because active just means that it's on the market. Now, in terms of the number of new listings that came to the market in May, we see that in 2024, we're actually right in the middle of where we've been in the past 5 years. So we're below 2021, 22, 2018, 2019, but we are still above 2020 and 2023. So the number of new listings is up. You can see that we're up quite a bit from May of 2023. Here in the green, we see 4,217 new listings hitting the market in May specifically. So they are just listed in May, and that's also up from April. So this gives us an indication that we are seeing an influx of new listings as compared to last month in April. Now, this is pretty typical for the market. A lot of sellers think that this is the best time to list because their flowers are blossoming, the sun is out or coming out, depending on the day, and this is the best time to list. So we typically do see this amount. I would argue that this is a little late to list because of what we're seeing right now. We're seeing people slow down. We're seeing buyers slow down on their offers, whereas at the beginning of the year, the first 4 months, they are much more aggressive. Now, in terms of pending sales, so those homes that have gone under contract, 2024, we're at the bottom of the pack compared to the last 5 years, so just barely above 2023 here and below all of the other previous 5 years. So you can see we've come up slightly from May of 2023 here, but compared to April, we're actually down. So this is where we see that those buyers have cooled off a little bit. We're coming down in the number of pending listings. And so listings are probably sitting on the market a little bit longer than they were before. Now, in terms of closed sales, remember that closed homes typically went pending probably in April. So for what went pending in April, you'll see that closed in May, most likely, unless it went under contract in April and closed in May. But the number of pending listings in April was 28, and here you see about 2560. So almost a majority of those closed in May. So that's what you see. Now, this is a big jump over May 2023 for sure, and a big jump from April. So we are still seeing those homes close, but my prediction is probably in June, based on the number of pending sales we saw in May, we won't see as many closed sales in June. So I think this is gonna start to trend down. You can see that last year in 2023, June was the peak of closed sales, and then it started to trend down from there. This is the typical seasonality that we see in the Seattle market. So it's very important for sellers to understand that while we'll see these closed sales come up at the beginning of the year through about May or June, then we start to see them trail off again. Now, in terms of where we're at amongst the past 5 years, again, right in the middle. So up from 2023, but right in the middle. Next month, we may fall below where we were in 2023. Now, one last thing that I promised you before we go. This month, in May and the beginning of June, Fannie Mae came out with a new analysis of their predictions for mortgage rates because we are not seeing mortgage rates drop as much as they previously predicted. So if you've been following along at all, at the beginning of the year, we thought mortgage rates were going to come down and be in the sixes by now. We thought probably around the mid sixes by the summer. That has obviously not happened. They've been pretty volatile. This is for a couple reasons. Inflation has not come down as much as expected, and we have seen strong employment gains in the economy. These two factors impact how the Fed thinks about cutting the rate. Now, the rate that the Fed cuts is not the mortgage interest rate, but the mortgage interest rate is impacted by the Fed rate. So those two are not the same thing, but they are impacted by each other. So Fannie Mae is now predicting that rates will average 7% by the end of the year. Their earlier forecast was 6.4% by the end of the year. Back in March of this year, they predicted 6.6 by the end of the year. So their first prediction was 6.4, and then in March they adjusted it to 6.6, and now they're actually saying 7% by the end of the year, again, because of inflation, strong employment gains. So they also are predicting now that they expect rates to remain above 6% through the year of 2025 and to flatten out at 6% by the fourth quarter of 2025. So they are volatile. That's the thing to remember. It's important to remember that these are all due to Fed policy expectations, and there is risk involved with predicting these things. No one really has a crystal ball. That said, it's super important to follow along with what's going on if you are thinking about buying. And as a seller, you need to know what's happening with these rates because your buyer, your target buyer, may not be able to afford as much as they could have, a year ago. Hopefully affordability is going to become a little bit more possible with these new interest rates, but that's not always the case. So keep those in mind as you're thinking about pricing your home if you're a seller. And if you're a buyer, keep this in mind, but also think about what can your real estate agent negotiate for you to get you a better deal. So I just spoke with a potential buyer the other day and we were talking about condo purchases. And one thing that buyer didn't know about is that we can actually negotiate that the seller pays a credit towards your closing costs to buy down your interest rate. So it is possible to have that seller pay a closing cost to buy down your interest rate, let's say, for example, from 7% to 6.8% to help you get into a more obtainable monthly payment. If you want to talk about other strategies like this, I'd be more than happy to talk. And again, if you're a seller thinking about putting your home on the market in this market, it is super important to hone in on your pricing strategy and be very aware of what's going on in the market as well. So feel free to reach out. As always, I'm Brennan Klaus. I'd love to help you with all of your real estate needs. If you don't know anything about me, I left Microsoft years ago to start helping people one-on-one invest in real estate, build wealth through real estate, and live better lives. And I'd be super honored to be able to help you do that. I hope you found this update of what's going on in the market helpful. And if you have any questions, please reach out. All of my contact info is below. Thanks for tuning in.